Hello, mis amigos. Welcome back. So, I had to do this video. I had to do it because I've had so many people the last several weeks call me, email, text me. In fact, this past Saturday, I was at a get together. Someone asked me, "Hey, what do you do?" And I said, "Oh, I do, real estate. I'm in real estate. I'm a real estate professional." They're like, "Oh, hey, can I ask you about the 50-year mortgage loan? Is it good? What are the bad things about it?" That's what everybody's been asking. And what I tell them, I say, first off, guys, I am not a financial expert. So please reach out to your financial advisor, your lender, to know more about the 50-year loan, the good, the bad, the really nuts and bolts of the numbers. I'm here kind of dumbify things for you guys. That's the way I work. I'm not a numbers guy. I mean, 2 + 2 = 5. Everybody knows that. But I'm more of a, just tell me what I need to know, right? Just tell me what I need to know. So this is what I told them. Look, grab a rubber band, right? 30-year loan. When you stretch it out, right? You stretch it out. What happens to the rubber band? It gets thinner in the middle. It gets more narrow. Those are your payments. Kind of getting more narrow. They're shrinking. That sounds good. I mean, man, that'll get me into a house. However, nothing worse than however or but. However, I read one study that says that what you're really saving is only 5.4%. 5.4% going from a 30 to 50-year loan. That's all you're saving. At the beginning, yeah, it might sound good, but when you hear the other side of the story, then you're like, maybe not. Okay, this is the other side of the story. Guys, remember, when you're stretching out, what you're doing is you also got to pay interest, right? What's interest? That's what a financial institution charges you for the use of their money. So it's, oh, really? From a 30, 20? Sure. Well, I'm going to charge you interest for that. That sucks. We don't want that, right? It keeps on accumulating. In fact, if you've had your own, you've had your own loan, you're doing, the first 5, 10, 15 years of the loan, what you're doing is paying interest, right? You're really not hitting the principal. That's what you want to do. You want to hit that principal as fast as you can. That way, you start building some real, true equity, right? In fact, the first 5, 10, 15 years, again, are you paying interest? Your in equity might only be the down payment, your initial down payment. That might be your only equity. So you want to bring that down, but it's hard when you're paying so much interest. In fact, I'm going to show you a crazy number in a short bit. There's another study that said that, look, for the first, go 50-year loan. And for the first, if you pay off the first 10 years of the 50-year loan, you would have only paid off 4% of that loan. 4%. Whereas in the same period, 30-year loan, the first 10 years, paying those monthly mortgage payments, you would have paid off 16% of that loan. That's a big chunk of number. That's a big chunk of money. In fact, when you go, let's go to 20 years. On a 50-year loan, the first 20 years, same study, 20 years, and the 50-year loan, you would have only paid off 11% of the loan. Compared to first 20 of a 30-year loan, 46%. Crazy, huh? So you can see that the 50-year loan sounds good at the beginning, but I know, maybe not. So to further kind of explain the impact of paying more interest, I found another. This one's awesome, from UBS, right? UBS used to be, I think, Union Bank of Switzerland. Check this out. UBS, huge financial institution worldwide. Okay. As a percent of total price, a 50-year mortgage results in total interest paid being 225% of the total home value. That sucks, right? Even I know that, This is more than twice the level under 30-year mortgage. 225. All you're doing is you're giving the bank money. Here you go. And they keep on, holding on to that house. In fact, look, this one best describes this great explanation from Sharon Corlinson. She's a Consumer Federation of America's Director of Housing. For the first 10 to 15 years of a 50-year loan, you are just going to be paying interest to the bank, like I just said. It's kind of like, you're renting the house and the bank owns the house. Well, even a 30-year mortgage, same thing. You don't pay your bills, your mortgage payments. The bank keeps it, still the house, but you get the idea. It's just crazy. It's a crazy thing, but I know a lot of you are desperate out there. But I say you wait. My advice on a 50-year loan, it's not good for me. And that's what I'm telling a lot of my buyers. I said, look, I don't think it's a good idea, but let's sit down. We'll talk if it's being offered, because that's the other thing. Our banking institution is going to offer this. There's so many things that are involved in this because you also might be paying a little bit more interest. Your interest rate might go up a little bit because again, if you're going from a 30 to 60, 50, that's more of a risk for a bank. And also, when you get let's say you get your mortgage from I don't know, it's Bank of America. Well, you have to sell it to the secondary market. And how is that going to work out when you're stretching out that much? Now you might say to yourself, man, that 50-year loan, that's not crazy. That's stupid or whatever. But at least there are ideas. What can we do to get people in the house? And in fact, 50-year loan is not not so crazy for a lot of these countries out there because Mexico and out in Europe, there's several countries. Spain is one of them. 50-year loan. They offer a 50-year loan. In fact, Finland, I looked it up. They have a 60-year loan. A 60-year loan, although, yes, I did do some further digging. It's not too popular. And you think that's crazy? Japan, wait for it. They offer a 100-year mortgage loan. It's called an intergenerational loan where the grandparents could pass down the I call it debt down to their grandkids so they can have a home. Thank you, Grandma, Grandpa, but I hope you paid off a lot of that one, which is probably not going to be a lot. 100 years, it's crazy, but there are ideas that are being thrown out there. Again, guys, if you have any questions about mortgages, please reach out to your financial institution. What do you think? 50-year, good, bad? You don't mind paying the interest as long as you're a house? I'd love to know. Just let me know. All right, guys, good luck.